Hey everybody, Mike Hill with Money Matters with Hill Financial Group right here in Big Bad, Midlothian, Texas. I'm up here in the Union 28 Speakeasy yet again, I guess behind the green curtain is what we like to call it. Today we're going to do we're going to have a little bit of fun. We do some serious podcasts. We hopefully get some advice from it. We try not to go too long. Y'all know me by now. If there's a microphone, I love it, and I will talk your ear off. But we had some kind of like games that we were thinking up in the office and said, we wrote down some scenarios. You know, everybody has that dream scenario. Well, for example, the Mega Millions is at 303 million as of today. Who knows what it's going to be by the time you see this podcast, but it's 303 million. What would you do if you won the lottery? Okay, so if you won the lottery, first thing is tell no one. Make a copy, many copies of the ticket. Second of all is you would want to go to an attorney's office and open up an LLC. So it's not your personal name when you claim the ticket. It is in the LLC name where we could transfer the funds right off the bat. An LLC is a limited liability company. So that's the first thing. And then I get this all the time. Well, did you take the annual payments or would you take the lump sum? Something that big. Taxes aren't going to matter. You're going to be in the highest tax bracket. Take the lump sum because the town value of money and when you invest, etc. I can go into investing and on all the things, but I would like to bring it down to more realistic numbers. What if you won the lottery or inherited $500,000? What would you do? Well, if it's the lottery, it's taxable. And if it's $500,000, do you take the lump sum or do you take the annual payments? Because the annual payments may be, I don't know, $30,000 a year, give or take, with that number, maybe 40. And it may keep you in a lower tax bracket. That is something to consider as you're going forward. Most people say, I want to take the 500. I don't care if I'm in at 400 or 350 when it's all said and done. But at that point, you're not quitting your job. You're not doing anything like now. Inheritance, it may not be taxable depending on the size of the estate, what is actually inherited. If it's non-IRA assets, if it's a house or if it's a stock, you get a stepped up cost basis right now. So you may not have to pay taxes on it. That's a whole different ballgame. Where an IRA, you have to pay taxes over on an inherited IRA. You got to take it out over 10 years and pay taxes on it. So there's little things that you could do, but the fun answer I think would be to absolutely pay off all debt. That even if you're worth millions at that point, pay off all debt. Plan that dream vacation. Go somewhere for a month because you're going to get bombarded. But those are little things. The other thing is this. I got this one. Nowadays with mortgage rates going up, you have people that have a lot of equity in their house, but they don't want to move because their mortgage would double. But some of the things that I've been seeing here lately, and this is a difference in philosophy from just 5 years ago, is I'm seeing people that maybe bought a house for $300 and now the house is worth $750. Well, do I sell this house, take that $450,000 and go to a tiny home, smaller home with no mortgage whatsoever? Or do I use all that equity to get a bigger house? In my opinion, the closer and closer you get to retirement, absolutely is a better idea to downsize. In my opinion, if you can handle it, it is always better to not have a mortgage during retirement because I get all these people and all the things. My house is an investment. My house is an asset. It is. But at the end of the day, it's a place, it's a roof over your head. You still need to live somewhere. So to not have a mortgage and not to have that debt tied to you when you're wanting to go on trips, when you're wanting to go on vacations, I think is a very smart thing. It's a lot harder to do now with these higher, but if you have a lot of equity, what I would challenge some people is maybe you downsize, have your main house completely paid for. If you just have to have mortgage debt, which I do like for a growth asset, maybe pick a place like Destin or Colorado or something like that, and you can VRBO it. At least that way the mortgage is paid for, and then a month out of the year, you go stay there. I've had people that do that. So those are things that, in my opinion, not to get tiny home versus large home, but a lot of people don't think along those lines of, you know what, I've got a lot of equity in my house, but what good is it? Because I really don't want to go bigger and pay a bigger mortgage. I would argue right now the trend is actually going more towards smaller houses so it can be completely paid off because there's only two of you, or maybe there's two of you. Hopefully you don't have a 40-year-old stepson situation there or something like that, but you don't have a Will Ferrell wannabe living with you, but that's a whole nother thing. The help a friend situation. A close friend asked to borrow $10,000 on a business idea. Do you lend it to him? No. Sorry. No. I'm forgetting right now the old passage. You never lend friends money, but basically you can keep your money, you can keep your friends. You can't keep both when you lend to your friends. Something like that. So I'm just very much get it. You can help him with all the advice in the world. There's enough banks out there. If he cannot get a loan from the bank for $10,000 or $20,000, what does that tell you? Because banks will loan to people with average credit scores. They may pay a high rate of interest, but that's why they do so. So if he cannot get a loan from a bank or other sources, I don't care how good the idea sounds. My advice would absolutely be, if you care about the friendship, or if you are at a point in your life where if you were able to give them $10,000 and never care about it again, I would much rather have you do that, because all it's going to do if one payment is missed or one thing is done or the business isn't doing as well, that's all you're going to think about. You're not going to think about how the Cowboys or the Rangers or whatever is doing or who traded Luka. You're not going to be talking about that with your buddy. You're going to be talking about, well, tell me about that $10,000 again. How's your business doing? I mean, I'm not asking, but I kind of am. It's always going to be a point of contention. So, and then the other one is, do you travel or do you keep putting money aside for saving? I'm all about saving, but what I would tell you is, we talked about this in our second podcast, is I always like the idea of having a savings account with where you want to go as the title of your savings account. For example, I've always wanted to go to Ireland, i.e. the Green Jacket. Love Ireland. Want to visit some ancestry there and all the things, County Cork. I want to kiss the Blarney Stone. I want to do everything. But I know that life gets in the way and these bills add up and all that. And then I never do a credit card for travel. What I would do is, if I would open up a savings account that has the word Ireland on it, and then every month I'm putting $500 in there. Okay. And then after 12 months with no interest, it's worth $6,000. Now I hope I can go to Ireland on $6,000. Maybe I'm out of my element here, but on $6,000. And then that's when I start looking. I don't look before it reaches my goal. When it hits my goal, that's when I book the trip. That's when I do it. And hopefully if I'm smart enough, I can do that once or twice a year. But then when you go, the trip is paid for, you can do all the things. Don't bring that money back. That $6,000 is there to be spent. So I'm a big practitioner on living your life, and travel is one of them. What good is money, or what good is doing all this if we can't have a little bit of fun? But don't do it at the expense of paying your bills. Set up a savings account that has the name of what you're wanting it for on there. If it's a new car, put Camaro. I don't know. Whatever it is you're trying to get, that should be the name of your savings account, and you should be putting money into that. And then when there's enough to pay for it, that's what you use it. So hopefully I didn't take all the fun out of all these kind of dream scenarios. I got a lot more. Maybe I'll bring it up next time. But at the end of the day, these are fun things to think about. I think the takeaways would, if you're getting close to retirement, have as least amount of mortgage as possible. Maybe look to downsize. If you want to have a vacation, maybe call it a vacation fund or a trip fund and put money into it. I think those are some tips to hopefully, again, if you win the lottery, call me first. That would be the third one. But Mike Hill with Money Matters with Hill Financial Group. Thank you and God bless.